Quick interest rate update. Today, the Fed announced that they are increasing the Fed funds rate by 25 basis points. This is really no surprise. They've already said that they're going to increase rates. They have 7 rate hikes planned for 2022. What they're trying to do is curb inflation, have um, just a stability in prices, and by increasing the interest rates, it will decrease borrowing, and that will lead to less inflation. And so people sometimes ask me, like, "Hey, what's going on with mortgage rates?" And the one thing that I always look at is the treasury yields. And the reason why is, even though it's not a perfect correlation, uh, the government sponsored enterprise, Fannie Mae and Freddie Mac, they're going to be buying mortgage-backed securities, and the price that they pay is dependent on where the yields are. Usually, there can be sometimes some wacky scenarios where it doesn't quite correlate. So you can see here that just in the last, let's say, 2 years, we're now at the highest it's been in the last 2 years. So interest rates, not surprisingly, because it's following the treasury yields, are at the highest they've been in the last 2 years. And you can even go out further out, and we're at a time which is kind of similar to um, 2019, when rates were falling, and then they were, all of a sudden in the threes, if you remember that, in May, June 2019. But we could end up, going back to 2018, when it wasn't uncommon to have rates in the high fours, low fives. Uh, so that's kind of a great way to just track what's going on with mortgage interest rates on a day-to-day basis, because usually it will correlate with the treasury yield.